All right, good evening to all of you. I'm Commissioner Doug Allen, and I will be presiding over this hearing this evening. It is August 19th, and we're just now at 5 o'clock. We're here to receive comments on the filings that were submitted in our individual health insurance market here in the state of Iowa. While I have not yet had the opportunity to review all of the actuarial reviews performed by actuaries on my staff or under contract, it's clear from the number of filings that unfortunately we are experiencing another significant change in the individual market. Although there are a number of ways to measure annual medical inflation for 2024 and the first half of 2025, we are seeing trends in the high single digits, even as much as 10%. Some experts are suggesting it is even higher. Iowa Code Section 50519 establishes this public hearing on proposed individual health insurance rate increases, which exceed the average annual health spending growth rate. This annual health spending growth rate is published by the Centers for Medicare and Medicaid Services at the United States Department of Health and Human Services. That annual health spending growth rate is 5.6%. The purpose of this hearing this evening is to gather comments and information from individuals who are going to be impacted by the rates that have been submitted in these plans. My rate review is to determine whether the rates are neither inadequate nor excessive. This review is done on an individual insurance pool basis. Each company files its proposed rates based on its prior experience of losses and expenses in a particular insurance pool. The law does not direct me to look at a company's separate group rates or any of its self-funded business that may be governed by the Department of Labor under ERISA. Our rate review authority is primarily a function of balancing the total dollars paid out to cover healthcare costs in the forms of claims for a particular insurance pool with the mix of rates that are designed to collect enough premiums to cover those claims in that pool. On the docket tonight are 3 blocks of business that are pre-ACA plans. Under the Affordable Care Act, we have 5 insurers competing in the individual market here in Iowa. Wellmark Health Plan of Iowa, United Healthcare Plan of River Valley, Inc., Oscar Insurance Company, Iowa Total Care, and Medica Insurance Company. In reviewing the rates, the impact of rates is important. For tonight's hearing, I'm primarily interested in hearing from individuals who would be impacted by those rates. The primary issue is the affordability of those who actually have coverage in these plans. As you know, materials regarding these proposed rates are found on the Iowa Insurance Division website. So for tonight's hearing, we'll start with those who are in attendance in the hearing room. So this hearing is on the record, as we have a court reporter here to be transcribing what is said. So if you're speaking and giving comments, it's important for you to identify yourself. And then to facilitate that process, we do have a hearing sign-up sheet that's available, was available outside the room, and is available for you to list your name should you wish to offer a statement. At this time, I'd like to introduce to you Sonia Selmeyer. Sonia serves as the consumer advocate for the insurance division. Sonia.
Thank you, Commissioner. I'm just going to go through some quick housekeeping items before we start getting into the meat of the hearing. For those of you in attendance, like the Commissioner said, if you want to speak, there's a sign-in sheet, and I think everyone in here pretty much gave me one if they wanted to speak. We'll do it by company. I mean, you can walk through the lectern when it's your turn, company's turn to speak, and I'll call names and you can make a comment. If you're on the phone, you are muted. Do we have anyone on the phone?
We have about a dozen.
Okay.
Not on telephone, but in virtual.
If you're on the phone, if you called in via phone during the open comment section for your healthcare provider, proposed rate increase, and you would like to make a comment, please dial *3 to raise your hand, and you will be advised when it's your turn to make a comment. You will then need to hit *6 to unmute, and then hit *3 to lower your hand once you are done. If you're on the virtual feed, you are also muted. You can also use the raise hand feature on the virtual feed if you would like to make a comment under your healthcare provider's proposed rate increase. You'll be unmuted and you'll know when it's your turn to speak. You can lower your hand with the same button when you're done speaking. If you do not wish to speak but would like to leave a comment, you may place your comment with your first name in the chat section online. Just make sure that you name your insurance company and whether or not it's an ACA policy. All consumer comments may be made after remarks by the company. I'm now going to read my opening remarks for this hearing, and then my opening remarks are going to apply to all of the health carriers that we're going to discuss today, rather than saying it 8 times and then say it once, okay? Iowa law requires a public hearing when proposed health insurance rate increases exceed the federal health spending rate, which was 5.6 for the plan year of 2026. My role as the consumer advocate is to ensure consumer voices are heard before the commissioner makes any decision. If you received a premium notice from your health insurance carrier, today is your opportunity to share what that increase means to you. I ask others to allow affected policyholders the time to speak. Every proposal goes through 2 independent actuarial reviews, one by the Iowa Insurance Division's health team, the other by an external consulting actuary. Both must substantially agree before a recommendation is made. Our process has earned the federal effective rate review designation, meaning rate proposals are thoroughly analyzed, tested, and challenged. With regards to the 5 Affordable Care Act companies to be discussed, in recent years, enhanced federal subsidies have helped keep premiums low. In 2025, over a third of Iowa consumers received subsidies paid less than $10 a month. But those subsidies expire at the end of this year. Without them, some healthier individuals may drop out of coverage, which would weaken the risk pool and drive up rates. Today, I will also be mentioning the medical loss ratio, or MLR, which is a percentage of health insurance company premium revenue that it spends on medical care and activities to improve the quality of care. For example, if an insurer has an 80% MLR, it means that every dollar you pay in premiums, 80 cents is used to pay for medical claims and improving care. Since 2012, failure to meet this 80% MLR requirement over a rolling 3-year period necessitates issuing a rebate to consumers through a federally prescribed process. Rate change proposals are granted approval only when the federal MLR is expected to meet the 80% minimum standard. Thus, for any of the plans discussed today, should the MLR fall below that 80% over a 3-year rolling period, affected policyholders may be eligible for rebates under federal law. For 2026, Iowa's proposed weighted average ACA rate increase was 14.5%. That's below the national median of 18%, largely due to smaller increases from our largest carriers. I encourage all consumers to shop early during open enrollment and work with a licensed insurance agent or navigator to explore which ACA plans are best for their situation and their affordability. The commissioner will review this rate increase proposal after conducting public input, considering public input from the hearing, along with the internal team's recommendation and consultants' final reports. Comments may continue to be received until the commissioner makes the final decision on the proposed rate increase. Any additional comments received before the commissioner's decision, but after the presentation of the consumer testimony will be reported on the public rate hearing site.
At this time, Ms. Stella, I have a couple of comments with regards to the first 3 plans that are being considered. So I'd like to proceed with that. Again, you're here on, many of you will be here to talk about your individual plan. That's certainly where you can best describe the impact these rates may have on you. Obviously, in our state, there are a number of plans that are pre-ACA or referred to as pre-ACA, and 5, as I mentioned, are under the ACA. Those plans that are pre-ACA are oftentimes referred to as grandfathered plans, or sometimes grandmother plans. They're transition plans. that when the Affordable Care Act was originally signed, the president at that time authorized, if you like your plan, you can keep it. But the reality is with those plans, they are closed blocks. And what that means is new entrants can't participate in those pools. So those pools, although they've been around for more than 10 years now, those pools, because they are closed, continue to age. That does put a lot of pressure on us as regulators as well as the companies, given the fact that new lives can't join that pool, and that pool is aging. And so that is going to drive some of those costs. So you may see some differences in the rate increases that are being proposed for those plans that are grandfathered. If you would please, again, identify which plan you're in, so that we can recognize you for purposes of your comments as they relate to the plan that you yourself are experiencing. And again, so those first three plans, it's a Golden Rule Insurance Pre-ACA plan, the Wellmark Pre-ACA plan, and the Wellmark Health Plan of Iowa Pre-ACA plan. So with that, I'll turn it back to Ms. Sullivan.
We'll start with Golden Rule as stated on your agenda, and as Commissioner said, a pre-ACA policy block. Golden Rule Insurance Company has proposed a 24.6 average premium increase for its first pre-ACA block of business. The proposal affects all benefit plans with no variations by plan. Approximately 900 Iowa members are covered under this filing. The filing was submitted to the Iowa Insurance Division on June 9th this year and assigned the same day to Lewis and Ellis for independent actuarial review. The proposed increase translates to an average monthly premium increase of $130, rising from $531 of this year to a projected $661 next year. This average encompasses all members, all benefit plans, age groups, and geographic regions. The Commissioner will consider the public input, the internal team's analysis, and the Lewis and Ellis final report when reviewing this proposal. Please note that pursuant to the Iowa Insurance Division discussions with Golden Rule on July 23rd, we have tentatively agreed to a modification to 19.9% increase rather than the 24.6 pending the Commissioner's review. To give a little bit of background with regards to the actuarial basis for this, over the past 7 years, the average loss ratio for this block is nearly 84%. Over the past 12 months, the average loss ratio is nearly 96, which is worse than expected. Without a rate increase for 2026, IID, the insurance division, projects the loss ratio would rise to nearly 104%. With the proposed 19.9% increase, the division projects the 2026 loss ratio will be approximately 87%. The division further estimates that the federal medical loss ratio will be just over 90% under the proposed increase. Lewis and Ellis's projection is similar, also exceeding 80%. Both the division and Lewis and Ellis have concluded the proposed rate adjustment should continue to produce a federal medical loss ratio of at least 80% as required for all ACA and non-ACA filings. As of August 17th on Sunday, I had received only one public comment from a consumer. That comment is, we are a happy couple. We have been buying insurance from Golden Rule for 13 years. Our rates have gone from $682.94 a month in 2012 to $1,865.77 in 2025. This is ridiculous. Please deny Golden Rule as a base premium rate increase this year. To summarize, the average premium increase is approximately $45 a month. This is an average based on all the members, all the benefit plans, all the geographic regions. Comments received and posted by August 17th have been included in this test as required by Iowa code. Anyone from Golden Rule online that would like to make a statement? They told me they weren't going to, so I just want to make sure. I don't believe anyone in the room is Golden Rule. Is there anyone on the phone or on the virtual feed that would like to make a comment with regards to Golden Rule?
So. Hands raised there.
All right. You okay to go to the next one?
Let's go to the next.
Wellmark Incorporated is the next pre-ACA policy. Wellmark Inc. has proposed a 6.9 average premium increase for its pre-ACA block of business. The proposal affects all benefit plans with individual rate changes ranging from 3 to 10.6%. Approximately 20,700 Iowa members are covered under this filing. The filing was submitted to the division in June of this year and assigned the same day to Lewis and Ellis for independent actuarial review. The proposed increase translates to an average monthly premium increase of $45 a month, rising from $654 to a projected $699 in 2026. This average encompasses all members, benefit plans, age groups, and geographic region. The commissioner will consider public input, the internal team's analysis, and Lewis and Ellis's final report when reviewing the proposal. Per the actuarial review, over the past 7 years, the average loss ratio for this block has been just over 82%. Without a rate increase for 2026, the division projects the loss ratio would rise to just over 92%. With the proposed 6.9% increase, the division projects the 2026 loss ratio will be approximately 88%. The division further estimates that the federal medical loss ratio will be just over 88% under the proposed increase. Lewis and Ellis's projection is similar, also exceeding 80%. Both the division and Lewis and Ellis have concluded that the proposed rate adjustment should continue to produce a federal medical loss ratio of at least 80%, as required by all ACA and pre-ACA rate filings. The consumer advocate has received 6 comments from policyholders and members of the public. I will read one of those into the record. Another big insurance rate increase of 10%. This is unsustainable. Something needs to change. Americans can't keep picking up the tab because of this. If I kept adding 10% increase to the fees that I charge clients on my business, I would be broke in 2 years. In summary, the average premium increase is approximately $45 a month. This is an average based on all the members, regions, age groups, benefits. The comments received and posted by August 17th, 2025 had been included in this testimony as required by Iowa code. I don't believe there's anyone from Wellmark on. Anyone online that would like to make a comment on the Wellmark pre-ACA policy? Okay. Anyone in the room? I don't think anyone. I think everyone in the room filled out for ACA policy, correct? All right, this is the last pre-ACA. Yeah, it is the last pre-ACA policy. Wellmark Health Plan of Iowa has proposed a 3.7 average premium increase for its pre-ACA block of business. The proposal affects all benefit plans with individual plan changes ranging from 3 to 10.6, thus subject to the hearing. Approximately 400 Iowa members are covered under this filing, with only 400 members remaining in force on this closed block of business. It is becoming increasingly more difficult to predict future outcomes. The filing was submitted to the Iowa Insurance Division on January 9th, 2025, and assigned the same day to Lewis and Ellis for independent actuarial review. The proposed increase translates to an average monthly premium increase of $15, increasing from $406 a month in 2025 to a projected $421. This average encompasses all members, benefit plans, age groups, and geographical region. The commissioner will consider public input, the internal team's analysis, and Lewis and Ellis's final report when reviewing the proposal. Over the past 7 years, the average loss ratio for this book of business is approaching 87%. Without the rate increase in 2026, the division projects the loss ratio will rise to just under 82%. With the proposed 3.7 average increase, the division projects the 2026 loss ratio will fall to just under 82%. The division further estimates that the federal MLR will be 82% under the proposed increase. Lewis and Ellis's projection is similar, also exceeding 80%. Both the division and Lewis and Ellis have concluded that the proposed rate adjustment should continue to produce a federal medical loss ratio of at least 80% as required for all ACA and non-ACA filings. I have had 2 consumer comments as of Sunday with regards to this block of business. I will read one of those. Actually, I will read part of one of them into the record. This proposed rate increase would bring our premiums even higher, pushing an unreasonable cost further out of reach. Just for perspective, I recently reviewed our records and found that over the past 16 years, we've paid over $100,000 in health insurance premiums. That's a staggering amount for a healthy couple with minimum medical needs. That money could have been invested toward our retirement, emergency savings, or future security. Many, many times we have thought about canceling our policy, but the what if compels us to keep the policy. In summary, the average increase is $15 a month, and comments will continue to be received until the commissioner makes a ruling, and all comments have been posted as of August 17th as required by Iowa law. There's no one out from Wellmark online. Anyone online that would like to make a comment with regards to Wellmark's pre-ACA plan? On phone. Okay. All right. We will move on to Wellmark Health Plan of Iowa, the ACA policy. And I know several of you here in the room, and I'll call your name once I get done with my comments. You can come up to the lectern to make a comment. And just state your name before you speak for the court reporter. She's got your names on here, but just so she knows who is who, that'd be greatly appreciated. Wellmark Health Plan of Iowa has proposed a 12.6 average premium increase for its ACA block of business. The proposal affects all benefit plans with individual plan changes ranging from 5.3% to 17.6%. Approximately 83,000 Iowa members are covered under this filing, for nearly 63,000 members receiving increases exceeding the state public hearing threshold of 5.6%. The filing was submitted to the division on June 9th, 2025, and assigned the same day to Novarest Consulting for independent actuarial review. The proposed increase translates to an average monthly premium increase of $73, rising from $577 in 2025 to a projected $650 in 2026. This average encompasses all the members, all benefit plans, age groups, and geographical regions. Over the past 52 months, the average loss ratio for this scope of business is just over 78%. For the period January through April of this year, the average loss ratio for the block is 83.5%, likely worse than expected for such an early snapshot in the year. During this time period, loss ratios will be suppressed due to deductibles still being satisfied. The loss ratios for this block are expected to increase at least 10% throughout the year as deductibles are satisfied. Without a rate increase for 2026, the division projects the loss ratio would rise to just under 99%. With the proposed 12.6 increase, the division projects the 2026 loss ratio will be just under 88%. The division further estimates that the federal MLR will be just under 89% under the proposed increase. Novarest projection is similar, also exceeding 80%. Both the division and Novarest have concluded that their proposed rate adjustment should continue to produce a federal medical loss ratio of at least 80% as required for all ACA and non-ACA filing plans. As of Sunday, I have received 25 comments from consumers, and all those comments can be viewed online in case you're interested. I will read one into the record tonight. I just received a letter regarding Wellmark's proposed 12.6 increase. The amount is well above the inflation rate. I do not believe this is right and should not be allowed. Healthcare should not be a luxury, which is what it's certainly becoming. Please do not let Wellmark have this outrageous increase. Like I said, all the rest of the increases are on. In summary, the average premium increase is going to be $73 a month for this block of business, and it will continue to be received until the final order is issued, and the current testimony has been included to the commissioner and has been posted online as required by it. Okay, we'll take comments from those in the room first. Maggie Valentine. Is that right? Maggie Valentine? Okay.
Well, basically, I've come to understand that the proposed base rate increase to 12% in my case, but up to 18% for some Walmart Blue Cross Blue Shield policyholders has been shown by state employed and third-party actuaries to be necessary for Walmart to do business viably and to be able to continue to provide health insurance. However, which is a little research, according to Walmart's 2023 financial statement containing 137 pages and published on the Iowa Insurance Division website, only 84.8% of the money collected from policyholders went to paying claims. 8.8% went to administrative costs, including the $845,000 per year salary for the CEO, who's being paid by policyholders without their approval, and 1.2% went to taxes and fees. That leaves 5.2% in earnings from premiums. That's my math anyway. And I'm wondering where exactly that 5.2% is going. It's my understanding that Walmart is a mutual insurance company, meaning that it is theoretically owned by its policyholders. So at a bare minimum, should that 5.2% either be returned to policyholders or used to pay claims and apply to this discussion? How could Walmart possibly need to increase premiums if they have a 5.2% in earnings from premiums? And I can only assume that the state has analyzed this report or a similar report for 2024 if it's been available, and that any action employed to address the base rate increase would have analyzed it as well. There are numerous valid arguments as to why policyholders should not be asked to absorb such dramatic rate increases, but these numbers alone call into question the honesty and integrity of this process, in my opinion. I'm also extremely frustrated by the knowledge that the negotiating has already taken place and the increases have likely been agreed upon. It feels like this hearing is therefore nothing more than a formality to placate anybody who does want to make a public statement against the rate increases and give them false hope that their statements will be taken into account. Hopefully I'm misunderstanding that, but that's my understanding. At the very least, we deserve for our arguments to be heard before any negotiating takes place and certainly before any increases are agreed upon. And I'm simply asking that the Iowa Tax Commissioner's Office put the needs of Iowans above the profit of insurance companies and to please protect us and represent our best interests now and in the future. Needless to say, I'm against the proposed rate increases and request further negotiations take place to please lower or hopefully reject any increases at this time.
I'll answer one of your questions. That is, in terms of your comment regards to negotiation. There was reference to one negotiation, and that has to do with the actuaries for the company are negotiating with the actuaries for my office to try to come to an agreement as to what actuarially is justified. But ultimately, I make the decision, and my decision is based upon the information that's contained in the file. I have not yet reviewed. I've reviewed some of the redacted actuarial provisions or reports. But these comments tonight really do matter a great deal. So thank you for being here. And I'm going to wait to answer some of your other questions after other comments.
Matt Durr.
I guess I don't have much to say. I guess I had a letter in the mail that I'm on a ACA plan from Walmart, Health Plan of Iowa, and the 12.6% increase will raise my rate to over $500 a month. I currently pay $456.92 a month. I haven't been to the doctor in 4 years, and in 4 years I had one emergency visit, and they paid $270 of the total bill. So literally paid nothing of a $900 bill, and I had to cover the rest. And that I paid, $450 a month for that. In 2019, my healthcare was like just under $400, and now it's going to be up to $515. That is just astronomical for a person that doesn't go to make many visits. I don't know why it would be my healthcare increasing when I don't even go, make any visits. I think they should see that and say, that should be something that they take into account for. And it's ridiculous that it has to go up that much for me. And like I said, I just don't use my plan. And it's going to become to the point that I'm going to have to cancel it because, it gets over $500 a month. That's a lot of money every month. I can have a really nice car, which I don't have. That would be really nice. So that's about all I have to say. So.
Chris Lorraine.
Hi there, everyone. My name is Dr. Chris Lorraine, and I do my resident here. Thanks for having me. Thanks for listening to these stories. My wife and I are both entrepreneurs. We're small business owners and provide a small group policy for our team members that need to participate in that or want to participate in that. And just as last year, my wife and I went from our own small group policy to an ACA policy. And both the group policy and the ACA policy that we're on are particularly close to the ACA policy. I want to step back from the argument of rate increases, even though this is kind of directly to it. This is an American problem that we're discussing at this level, this minutia. Nations around the globe are struggling, their healthcare systems are struggling. But none are failing as much as the American health. And at the moment, what these rate increases seem to imply to many of us is that it's always a losing argument when you're trying to take care of yourself as healthcare. The rates of cost of goods, cost of employees, are going up across the country, especially here in Iowa. There's a recent report that ranks Iowa as one of the worst economies. And that doesn't bode well for small business owners. That doesn't bode well for individual policymakers when they see only greater increases coming. Small businesses are the heartbeat of American generations. They are the economy, and at the moment they're being pushed to the brink. These policy numbers and rate increases don't necessarily look good for the long-term health of small businesses. We see a rise in the utilization of deductible health plans, where the gentleman just before me referenced that he didn't go to the doctor, but he did have to go to take the shoulder most cost of that care. That's true for me. That's true for my family members. That's true for my employees. That they may think twice about this care because of the cost that they're going to, even after. I think many of the statements that we've made today reference this idea that policies are struggling because they have decreased enrollment or projected decrease. And I want to challenge that argument. If we rethink this whole idea, we could have one big 300 million policy. That's an argument for something like that. Examples around the globe, systems that operate much more efficiently than we do. We have systems that operate with much better outcomes. Lastly, my final comment as a provider in this healthcare system, as a provider for Walmart, my reimbursement rates actually down in July of 2025. So my premium dollars are increasing. My reimbursement rates for the patient I'm seeing at Walmart are decreasing. And it doesn't seem to make a whole lot of sense to me. And in fact, it provides a lot of us admitted disease about what it looks like. And I think we're seeing that on all sides with such discontent for our lastly, I want to comment that Walmart Heartland of Iowa has a known practice of restricting chiropractic providers in their network of HMO POS networks. That affects my office directly. I am a provider for the HMO POS networks. My own colleague in my office, I'm the chiropractic provider, they will not let it. That becomes a special thing when next month I go on a vacation. I'll be gone for about 3 weeks. That's the longest I've been away from my clinic for 12 years. And even though my other provider, Dr. Hartley, is in the Walmart PPO, contractually, he cannot provide locums coverage for my patients that are in the PPO. It's an absurdity. It's part of the system. And we follow the rules for compliance purposes. But I'd like to challenge this rating because I don't perceive well as improving now care outcomes of Iowans. I don't see rating as being tied to dramatic changes in how they're providing care. In fact, it's a continuation of practice that limit the access of patients, evidence-based pain management providers around the state. And I think that in the end, I want to circle back to the idea that this is an American problem. We can solve bigger problems if we all come together on this idea that the healthcare of all of us matters. If we continue down the path with the rising rates of chronic disease, we're only going to see devastation of the healthcare system, which may take time. This rate increase is a small portion of that, but exemplary, the bigger picture, bigger problem that we're all experiencing. So very frustrating. So I would encourage you perhaps to consider rejecting all rate price increases for the sake of Iowa. That's who you represent. Iowans that are struggling with the network, with struggling Iowa economy, struggling U.S. economy, and with a struggling healthcare system. That's not necessarily provided here.
Farming, Hayden.
I have a question, unfortunately, before I start my question or comment. Does anyone here know we pay in medical? All that medical, part of administration, part of it's pharmacy, part of it's testing, part of it's hospitalization. Does anyone know the percentage?
Yeah, we measure, when we do a review, we measure what's called medical loss ratio. And so we actually do look at the amounts of money, and we evaluate it on an individual pool basis. So to the doctor's point earlier about in the state of Iowa, we have about 3 million people. Nearly 50% of the people in our state are in self-funded plans, which means they're not in the business of insurance. They're in basically work provided, non-insurance, self-funded plans that are regulated by ERISA with the Department of Labor. My authority is limited to essentially the insurance pieces of our market. The Selmeyer mentioned this particular plan. I think it was Wellmark with 83,000 Iowans. And that 83,000, we look at that pool, and we do look at their historical experience based on that pool of individuals that are in that individual pool of the market. And we look at both the expenses that are paid out in the form of claims to individuals like Dr. Lawrence, who spoke earlier, as well as others. And then we look at, as it was mentioned earlier, the amount that does go to expenses, that goes to administration, goes to the operations with regards to Walmart. Does that answer your question?
No, I just wanted to know, out of every $100, 23 is drugs, 14% is doctors, 18% is testing, 20% is administration. I just wanted a simple percentage breakdown.
Yes, some of that for the amount of the areas we do regulate, we do have access to look at how those funds are actually expended out of the claims. Now, again, it's not dollar for dollar, because I could be perfectly healthy and not have any expenses and I still paid $100. It may be distributed to someone else, but yes, we can look over the population of that 83,000 and have the information available to us how that money is spent.
Okay. I think that I can make money. Basically, we have too many small groups. And we have too many administration. We've got little group, little group, and they're not going to one big pool. Workers, big pool. All the other people, small pools. But the problem is, we need to basically just get to one clinic. But if I'm actually listening to all of this correctly, we have roughly, 1.5 million workers in the state. And most of them are full-time workers. If the workers just pay about $3 an hour for health, that covers our entire health for the state. dentists, glasses, hearing, babies, hospitals, everything. There's so much money in just 3 hours of work. Now, people that don't work, we have to figure out how to make them pay. But making the state one big health plan is a lot cheaper. Not having these individual plans, not having to work yourself. You just take workers, times the hours work, $1 a month per hour, and everything's covered. No forms, no deductibles, no co-pays, nothing. Still as deducted. Second, we've noticed there's a lot of costs that are starting to get in for pharmacy management firms, the middlemen, keep track of drugs. And we've noticed that the same drug, one plant and another plant, significantly different. But when you make the drug, you have an operating cost. The drug manufacturer makes it, the other company does the research, develops it. That's already fixed cost. So how can one have such a different cost than the other one? So if we have all these plans tied together, we should have one price for all of our drugs and be the same for every drug. So what I want to know is, for drugs, to give you an example, why can't we just make our own distribution center for drugs in the center of the state? Take that drug, ship it out to the hospitals. Every hospital has drugs. They've got patients. So they got a pharmacy, we don't have any, and just get rid of the middle. And as for the insurances, you can't have that administration cost with 500 people, 900 people. You need what, about 250,000 people in the plan to be big enough bulk to get there. I mean, we only need one plan. If these other people on these other plans only have 60, 80,000 people, we all have to combine together in one plan. Yeah. So I want to know if my math is correct. I'll tell you everyone here that I did. I just took 1.5 million workers, 2,000 hours, at 3.5 or $3.8 a piece, and that gave us enough money to cover. Let's see, our state is around 200 to 225,000 revenue. About 10% is health costs, about 25,000, 25 billion. Why can't we make our own thing? And the reason I ask that is we have two funds. The state fund, general fund, has 2.9 billion. And we have a back-end fund of 900 billion that politicians talked about this year. Why can't we use that for a seed fund and make our own health insurance for the state? Get rid of all of them. Anyway, we can't have 5 plans. We can't have 5 administrations. Pool is too small, our drugs are too stretched out. We need more all together. So one plan, put us with workers, but you can't have 5 plans. Okay, that's it.
Yeah, my name is Terry Lee Dollar. Been at Wellmark for several years. It is the ACA plan. It's bronze. I got $5,000 deductible, which that kind of lowered premiums, but yes, the premiums were shot up to $35.03 a month, which is $420.36 for the year of 2024. For 2025, shot up to $97.30 or $1,167.60. I kind of asked my health insurance advisor, hey, well, what's going on here? She was telling me something which I said, that's just going against what I think is Wellmark had less claims And then if you want to call it the government health care or a wall plan, whatever, the credits, health insurance companies so much, and if they don't use that up, claims, then they're almost like penalized for the next year. And it's funny as much. So there's some truth there. Answer there, but
Well, the tax subsidy structure, it can actually depend on who else is in the market. So I don't know the specifics of your plan, but you're receiving those tax credits as a way to reduce your experience under the plan. So that is not a policy that I review. I don't review those subsidy structures. That's all set by federal law. But anyway, it can just depend upon the relative rates between the insurance companies, if that makes any sense. Because it's actually set by the second lowest silver plan. So anyway, I'm sorry, it's pretty complicated. Certainly, I understand why you would want to talk to an insurance specialist to help you navigate through that. I have no regulatory authority over that. That has been set by the federal statute.
yeah. One other thing, more people, but yeah, that huge increase for 2025. I don't know, just a few months later, income tax time. Tax preparer said, well, here's some of the problem. My financial advisor changed things up a little bit so I could get a higher income than what I put down. Started the new year, so.
Yeah, so your health status doesn't no longer affects your big rate experience under the Affordable Care Act. It's actually set based on the level of income. So you're sort of left with, instead of managing your risk, you're managing your financial experience. And again, I know there are all sorts of opinions as to how that is to work. To the point earlier of the gentleman that spoke with regards to his health experience, that is not allowed. There's no differentiation allowed based upon that. So it is dependent upon your financial advisor and your tax advisor to figure out what your experience will be if you're within that range of individuals who receive the tax premium. And I don't mean to explain that to you tonight. It's far too complicated for us to do it in this open hearing, but again, I'm trying to address you.
I guess that's about it. Turn it over to somebody else.
Thank you, sir, for being here.
Do you have anyone online that wants to comment? I will move on to healthcare. River Valley has proposed an 18.82% average premium increase for its ACA block of business. The proposal affects all benefit plans with individual plan changes ranging from an increase of 16.32% to an increase of 21.38%. Approximately 600 Iowa members are covered under this plan, with all 600 members receiving the increase exceeding the state's public hearing threshold of 5.6%. The filing was submitted to the division on June 9th of 2025 and assigned to Nova Rest Consulting for an independent actuarial review. The entire rate filing was refiled on 8/8 of 2025 to remove potential impacts of prescription tariffs. The proposal increase translates to an average monthly premium increase of $121, rising from $640 in 2025 to a projected $761 in 2026. This average encompasses all its members, benefit plans, age groups, and geographic regions. United Healthcare Plan of the River Valley is new to the Iowa market in 2025 and only has 6 months of reportable experience. For the period January through June of 2025, the average loss ratio for this block is nearly 77%, likely worse than expected for such an early snapshot. During this time period, loss ratios will be suppressed due to deductibles still being satisfied. The loss ratio is expected to increase around 10% throughout the year as deductibles are satisfied. Without a rate increase for 2026, the division projects the loss ratio would rise to nearly 93%. With the proposed 18.8 increase, that division projects the 2026 loss ratio will fall short to just over 78%. The division further estimates that the federal medical loss ratio will be just under 81%, under the proposed increase. Novarest projection is similar, also exceeding the 80%. Both the division and Novarest have concluded that the proposed rate adjustment should continue to produce a federal market loss ratio of at least 80% as required under the ACA and non-ACA rate filings. I received one comment from an Iowa policyholder, and I will read a portion of that. As someone with limited means, paying over $875 a month for health insurance is already an immense strain, especially now with the added expenses and responsibility for caring for my newborn baby girl. Additional rate hikes, particularly in the current economic climate, risk making essential healthcare affordable and could lead to lapses in coverage for individuals like myself who rely on stable premiums to budget for necessary medical expenses. Maintaining the current rate will help ensure continued access to care without creating undue hardship. In summary, the average premium increase is $121 a month. And the comments received by August 17th have been posted and have been given to the commissioner, and we will continue to take comments until the final decision is rendered for Iowa Code. I don't believe there's anyone in the room that wanted to comment on United Healthcare River Valley. Is there anyone online? And I know the company is not available. Okay, I will move on to Oscar. Oscar Insurance Company has a proposed increase of 12.47% as an average for its ACA block of business. The proposal affects all benefit plans, with individual plan changes ranging from an increase of 3.95% to an increase of 37%. Approximately 26,500 Iowa members are covered under this filing, with over 22,500 members receiving increases exceeding the limit of 5.6%. The filing was submitted to the Iowa Insurance Division on June 9, 2025, and signed the same day to Novarest Consulting for independent actuarial review. The entire rate filing was refiled on 7/23 of this year. The proposed increase translates to an average monthly premium increase of $64, rising from $516 in 2025 to a projected $580 in 2026. This average encompasses all its members, benefit plans, age groups, and geographical regions. The commissioner will consider public input, the internal team's analysis, and Novarest's final report when reviewing the proposal. Over the past 17 months, the average loss ratio for this block has averaged 72%. Due to this favorable performance, since Oscar's entry into the Iowa market in 2021, the company implemented 3 prior rate reductions. 9.14% decrease was effective January 1 of 22, 1.5 decrease on January 1 of 24, and a 5% decrease effective January 1 of 2025. However, for the period January through June of this year, the average loss ratio for the block is 81%, likely worse than expected for such an early snapshot. During the period, loss ratios will be suppressed due to deductibles still being satisfied. The loss ratios for this block are expected to increase at least 10% throughout the year if deductibles are satisfied. Without a rate increase for 2026, the division projects the loss ratio would rise to over 90%. With the proposed 12.47% increase, the division projects the 2026 loss ratio will remain just around under 81%. The division further estimates that the federal medical loss ratio will be just over 84% under the proposed increase. Novarest's projection is similar, also exceeding 80%. Both the division and Novarest have concluded that the proposed rate adjustment should continue to produce a federal medical loss ratio of at least 80% as required for all ACA and non-ACA rate filings. The commissioner will review this rate increase proposal after considering all the public input from this hearing and the public comments made prior, along with the internal team's recommendations under the consultant's final report. As of Sunday, I have received 2 comments from policyholders, and I will read one. I got the letter from Oscar Insurance Company about the increase. I do not approve of the increase. Thank you. The average premium increase is approximately $64 a month. This is the average based on all its members, groups, benefit plans, and regions. The comments received and posted by August 17th have been included in the testimony report as required by the Iowa Code. I believe we have two people in the room that would like to make a statement. Evelyn T. Tia.
Hello, everyone. My name is Evelyn Chia. I'm not a policy holder to outside insurance, but I feel that they use me, and I've been wanting to talk to somebody about it, and don't know where to go. But this few times, they sent me 2 different letters for this conference. So I feel that I should come here to express what they did to me, and then to seek help. Okay. 2024, 2024 beginning, I saw a letter in my son's mailbox from Oscar with a fake insurance card to me that I pre-approved. So I called them. I asked for them to explain about the letter they wrote me, and they explained it. So at which time they said the government was giving subsidy. So took all my information and they said they were going to get back to me. I waited, nobody got back. Nobody sent me a letter, no insurance card. I never attended no clinic. I don't know my provider. And when I call, they always refer me to my agent, and my agent never picked my call. So I don't know at what point in December they wrote me with a letter inside that before it 1095 with a 1095 in it. I should set it up for tax return. So I said I'm not going to do it because they took my information, they didn't give me insurance card, they didn't give me anything, they didn't give me the subsidy, and when I called, my agent never picked my call to say anything to me. So the whole year, they think I ended policy holder. Who pay the insurance for me? Because when you get insurance, you pay it every month. So how is everything paid for me every month for the whole year up to this December that they are sending this thing as back to me? So it confused me. So I came here to tell you that Oscar have been using me. They used me for a whole year. And they sent me a letter that I should renew. I did not renew. So at which point that they feel that I'm still their policy holder. Why? Why are they treating me like this? I went to Medicaid, I applied for Medicaid, the government gave me Medicaid for 6 months. So after I got a job, I called them and they took the Medicaid away. So I went to Medicaid office and they gave me something, I don't know, 1085, carried to the United Way and did my tax, the people from the Medicaid office. But still, Oscar still write me letter, like I'm their policy holder. I'm not their policy holder. I need someone to help me to get them off my back. Yes, I'm not their policy. They use me. They use my information. That's why I want to teach.
We can stop that. Okay, later after the end, we have to discuss it with you.
Okay, thank you.
Bill Gerhart.
Hello. My name is indeed Jill Gerhart. Like this lady was expressing, I also have auto insurance. In May of 2024, I requested a quote off of Marketplace. Quote. They indeed took my information, my social security number, my date of birth, my maiden name, everything. They signed me up for a policy without my knowledge. I was not aware of this until it was brought to my attention by my tax preparer, saying that I had my work insurance and Oscar insurance. Like this lady, I did not receive a policy, a signed contract, an insurance card, any information about doctors within the network, any information. So I did call Oscar. All of this.
I filed a complaint with Oscar, a marketplace appeal request. I appealed my insurance through Marketplace. Every time I called Marketplace, they said deal with Oscar. Every time I said I called Oscar, they said deal with Marketplace. I have proven to them through my own insurance that all of my medical was not sent to Oscar for claims. It was sent through my work insurance. This has been proven, documented, and Oscar flat out told me it didn't matter that I had documentation saying that these claims were submitted through a different insurance, that Oscar had claims, and they were not going to cancel my insurance for not only this year, which they refused to let me cancel, but also to send me a letter saying that I was not registered for insurance for 2024, that I have not filed my taxes for because I am not going to find taxes for somebody for an insurance that I did not sign up for. I'm also seeking legal legal issues because not only did they violate HIPAA by pulling my doctor's visits and medical records off of the website from the doctor's offices, they also use my social security number fraudulently. They know the name of the person, the insurance they use that used the information. I was told by the first representative that there were several people that this happened to. So if Oscar is covering 25,000 Iowans and they're claiming 80% losses on claims that one were not filled out because all of them on Oscar, in here you will see that they paid out zero because I was outside of network. So none of my claims were paid, but yet they had the audacity to sign me up for a tax credit and take my tax refund to pay the premiums that I did not pay for insurance that I did not register for. And now I look forward to higher premiums for them taking another year of my taxes because I'm not paying them much. So Oscar should be eliminated from the list. Yes, thank you.
Thank you for being here and please stay around.
Oh, I will.
Anyone online that would like to make a comment regarding Oscar? Okay, Iowa Total Care. Iowa Total Care has proposed a 26.92% average premium increase for its ACA block of business. The proposal affects all benefit plans with individual plan changes ranging from 24.5% to 34.95%. Approximately 7,000 Iowa members are covered under this filing, with all members receiving increases exceeding the state's public hearing threshold of 5.6%. The filing was submitted to the Iowa Insurance Division on June 9th, 2025, and assigned the same day to Nova Rest Consulting for independent actuarial review. The entire filing rate was refiled on June 28th of 2025. The proposed rate increase translates to an average monthly premium increase of $140, rising from $522 a month in 2025 to a projected $662 in 2026. This average encompasses all members, benefit plans, age groups, and geographical regions. The commissioner will consider public input, the internal team's analysis, and Nova Rest's final report. Iowa Total Care is new to the Iowa market in 2025 and only has 6 months of reportable experience. For the period January through June of 25, the average loss ratio for the block was 83.4%, likely worse than expected for such an early snapshot. During this time, loss ratios will be suppressed due to deductibles still being satisfied. The loss ratios for this block are expected to increase at least 10% throughout the year as deductibles are satisfied. Without a rate increase for 2026, the division projects a loss ratio would rise to nearly 102%. With the projected 26.92% increase, the division projects the 2026 loss ratio will fall to 80%. The division further estimates that the federal medical loss ratio will be 82.3% under the proposed increase. Nova Rest projection is similar, also exceeding 80%. Both the division and Nova Rest have concluded that the rate adjustment should continue to produce a federal medical loss ratio of at least 80% as required under for all ACA and non-ACA rate filings. As of Sunday, the consumer advocate has received one, actually, as of this morning, I received one comment from consumers. And I do not have that since that was after my trial notebook here, my hearing notebook was put together. But I will make sure that consumer gets that, and it might be posted online. The average premium increase is approximately $140 a month. This is an average based upon all members, age groups, benefit plans, and the comments received and posted by August 17th have been included in this testimony report as required by the Iowa Code. I don't believe we have anyone in the room for Iowa Total Care, is that correct? Anyone online for Iowa Total Care? We'll go to Medica. Medica Insurance Company has proposed a 26.76% average premium increase for its ACA block of business. The proposal affects all benefit plans for individual plans ranging from 8.74% to 47.73%. Approximately 10,000 Iowa members are covered under this filing, with all members receiving increases exceeding the state's public threshold of 5.6%. The filing was submitted to the division on June 6th and assigned the same date of no arrest for independent actuarial review. The proposed increase translates to an average monthly premium increase of $157, rising from $586 in 2025 to a projected $743 in 2026. The average encompasses all members, benefit plans, age groups, and geographical regions. The commissioner will consider the public input from the comments already received and today, and the internal team's analysis and Nova Ref's final report. Over the last 29 months, the average loss ratio for this block is 80%. The loss ratio for this block for the first 5 months of 2025 is over 100%, significantly exceeding normal expectations. Without a rate increase for 2026, the division projects the loss ratio would rise to nearly 105%. With the proposed 26.7% increase, the division projects the 2026 loss ratio will be nearly 83%. The division further estimates that the federal medical loss ratio will be just below 85% under the proposed increase. Nova Ref's projection is similar, also exceeding 80%. Both the division and Nova Ref have concluded that the proposed rate adjustment should continue to produce federal loss ratios of at least 80% as required under all ACA and non-ACA rate. The commissioner will review this increased rate proposal after considering public input from this hearing, along with the internal team's recommendations and the consultant's final report. I received 5 comments from policyholders. I will read one. I am a medical insurance consumer living in Ankeny, Iowa. Like many, my health and the health of my household is covered by an insurance policy from Medica that was obtained from healthcare.gov. The plan has a high deductible and is fairly affordable, but is the best I can manage. I rely on this coverage for my healthcare needs. Recently, I received a notice from Medica informing me of the proposed rate increase of 26.8% to take effect January 1 of 26. I'm writing to urge you in the strongest terms to reject this proposal. In summary, the premium increase is approximately $157 a month. This is an average, and the comments received and posted by August 17th have been included in this testimony report as required under the Iowa Code. And Medica is in attendance today. You guys want to come up, state your name, and you can provide your comments. Thank you.
Thank you for the opportunity to comment. For the record, my name is Matt Schaefer. I am the Senior Director of Government Relations for Medica. I'm here to introduce my colleague, Carolyn Ringhoffer, who serves as our Vice President and General Manager of Individual Markets. Before I turn it over, I want to emphasize that we do not make this decision about our proposed 2026 rates lightly. I'd like to speak to one of the contributing factors to the rate increase, which has been alluded to a couple times this evening. Since 2021, the federal government has provided enhanced premium tax credit assistance for individuals and families in this market. A number of those subsidies will expire at the end of the year. This could result in Iowans paying double or triple their current effective premium when you factor in a reduction in subsidies.
We believe as many as 30,000 Iowans may forego their health coverage as a result. Many of those individuals who will forego that care are in better health, and that dynamic would result in care becoming more costly for those who remain in the market. I'll now turn it over to Ms. Ringhoffer and appreciate the opportunity to comment.
Thank you for the opportunity to participate and testify today. My name is Carolyn Ringhoffer, and I am the Vice President and General Manager of the Individual Family Business at NEPCA. As Mr. Schaefer mentioned, our decision about our 2026 rates was not taken lightly. I read the public comments and understanding the impact, regret the necessary action. Factors driving our rate increase has been discussed: increases in medical utilization, increases in costs of those services, particularly with prescription drugs, as well as the anticipated consequences of the end of the enhanced tax subsidies. Medic has proudly served the Iowa market for 9 years, including in 2018, we were the only carrier on the marketplace. Again, I thank you for the opportunity to be here in your comments.
I want to thank you for being here and very encouraged to be the only carrier to appear. Thank you for that. So I'm reluctant to even ask you a question in the fact you're not prepared. And as I mentioned earlier, I mean, I take this information that I hear tonight, but I also sit down with my actuaries and individuals, and we go through this in great detail. But I am curious about the first half of this year and what you report as essentially having a loss ratio of over 100% first 5 years. Any suggestion you wish to publicly make about the reason for that? That is not a trend that is only being seen, experienced by Belin. If you're not prepared to answer it, I can ask you at a later time, but I'm curious tonight in front of these people if you have any explanation that you're prepared to provide.
Certainly, we would welcome the opportunity to refine the writing more detail. But like I said, the increases that we're seeing, not only in utilization, just being significantly higher than we have seen in the past several years, but also the costs of those services, particularly prescription drugs. And then, of course, the risk pool changes that we are anticipating based on the end of the enhanced subsidy.
And I understand about that. That's looking forward. I mean, frankly, what I'm actually really interested in is what you've already seen, because those subsidies are in place today. And the loss ratios that you're describing here, I mean, again, for the benefit of those in attendance, could you just explain the 100% loss ratio? What does that mean for your company? Because there were questions earlier about administrative costs. Again, I'm so sorry you're the only one here to provide education, but part of the benefit of this hearing is actually to help people understand like what's going on. So can you describe a little bit more about medical loss ratios?
Sure. I mean, the gentleman earlier talked about the different pieces of the rate, including administrative costs, and including the medical expense costs. And as we measure medical expense ratio or medical loss ratio, the requirement is that we hit 80%, so that 20% of the additional dollar, 20 cents on the dollar, can be used for administrative costs and improving our systems and those kinds of things. And we are at a point where we are literally using every dollar we take in to pay medical expenses. So we're not covering our overhead at this point.
Well, that's like with 105, you're actually paying out $105 for every $100 that you're collecting. So I think, again, it's just, again, I deal with these numbers all the time. Most people do not. And so, again, I just think last year was a challenge, but nothing like this year. I mean, I think there's something certainly going on that's concerning to all of us.
Yeah, we've seen increases in inpatient, again, the drug costs, particularly with the GLP-1s, which we cover for diabetes and heart conditions. Those are incredibly expensive and very popular. The behavioral health expenses, I think, after COVID, we've seen those numbers continue to rise. And, the good news is people are getting help that they need, but the bad news is that adds to the medical expense.
Yeah. And again, I would just share with the audience, I mean, these are the individual, this is the individual market. I know there's been discussion about even a bigger group. I mean, the frank reality is that these trends we're seeing across all of the market, and it has to do with utilization and expense. Understanding your concern over changes in terms of that subsidy. Thank you again very much for being here.
Thank you.
Thank you.
Maybe you can answer the question. How much of the salary did you get in this drugs?
I don't have that off the top of my head, I'm sorry.
Yeah, drug costs are a significant concern. Thank you, sir. Anything further?
Two people apparently online would like to make comments.
If you would invite Jackie to unmute at her end. Because I have to put a button, now she has to put the button.
Jackie, if you want to unmute on your end, you can make a comment.
Can you hear me now?
Yeah.
Okay, great. Thanks, everyone. My name is Jackie Holmes-Smith. I'm from Ankeny, Iowa. I've been an Oscar plan customer for 2 years now. I do not qualify for any of the subsidies. I pay probably one of the highest rates for the premiums. I'm opposed to these rates going up. Not only I can certainly afford it, but the point is I know there are a lot of people who can't, and that health insurance shouldn't be more than a car payment. I'm really sorry to hear about those people in the room who had an unfortunate experience with Oscar, legally, etc. But my experience with Oscar itself as a carrier has been great. I'm just concerned by what healthcare is doing to our fellow Americans, and the choice shouldn't be either, go poor paying premiums or risk, medical bankruptcy. So I just want to go on record as saying, please try to keep it to a minimum. I understand costs go up, but it's really an unfortunate situation that we're in. So thank you.
Thank you, Jackie.
Oh, by the way, I did submit public comments, and I don't know, I think I missed your deadline. I'm hoping that you can still include those, though, for the record.
Yes, I do. Thank you.
Thanks.
Like Carter to unmute.
Carter, would you like to speak? He's from Oxford.
Hello.
Thanks, Carter.
Hi, can you hear me?
Yep.
Okay. Hello, my name is Carter Knight. I am an actuary for Oscar. I've been working on the Iowa market the past, I think, 4 years now. The one comment I have is I will personally look into the transcript of those members that were claiming there's some fraudulent enrollments and see that those are investigated into. Otherwise, I have no further comments on our filing.
Thank you, Carter, for being here.
Okay. Any other comments from policy holders? Either online or in the room? We have one non-policy holder, Xavier, that would like to make a brief comment.
I do appreciate your time allowing me to speak, because, and I should say my name is Xavier Kerrigan. I don't come here today as what it is that I do, and I full disclosure, I am running for U.S. House. That's not why I'm here. The reason why I'm here, and I wrote this down. If you don't mind, I'm just going to read it as quickly as I can. I'm here today as a citizen who has been forced to navigate the ACA marketplace, but I had no other insurance options. I know what it's like to lose your insurance and be thrown into a system where every choice is a bad choice, or a difficult choice. When you're uninsured and dealing with a chronic condition, the marketplace becomes a cruel joke disguised as health. I have asthma, and without insurance, my Brio Ellipta costs nearly $500 a month, and my albuterol $75. That's about $600 a month, just so I can breathe. So when I lost insurance, I had to ration a 3-month supply of Brio and stretch it over 15 months. Imagine cutting your oxygen by 4/5 and then praying you don't collapse before you can afford your next prescription. I also ended up in the ER with a leg infection while uninsured. 2.5 days in the hospital, and the bill was over $30,000. Every doctor who poked their head in the room billed me as if I had begged for their time. They were billing my sickness like a mechanic, charging for parts I never asked for, and more importantly, never received. That experience taught me something important, that when you have no choice but the ACA marketplace, you're not choosing healthcare, you're choosing how you want to go broke. And today, you're being asked to make those choices even more impossible. I'm not gonna read off the stats because we all know what the stats are as far as the price increases they want to do. And tip of the hat to you guys for showing up. I can understand that kind of bravery. While I do currently work in the corporate sector, it takes a lot of guts to show up. So, you know, don't necessarily always agree with what the companies do, but good on you. So the federal growth rate standard is 5.6%, 100 percentage point above that. I would argue not medical necessity, it's corporate greed. But let me tell you what these numbers mean for real people. When someone like me with a chronic condition who lost their employer insurance has to choose between the marketplace, we're already choosing between rent and medication, between groceries and prescriptions, between keeping the lights on and keeping our lungs working. These rate increases don't just affect premiums, they affect whether people like me, and the others in this room, and online, and the people who couldn't attend can afford to be sick at all. Meanwhile, United Health raked in 14.4 billion in profit last year. Iowans Health made $6 billion and Cigna made $3.4 billion. These companies are not struggling. They are operating on thin margins. They are extracting maximum profit from people who have no choice but to pay. And when I was in that ER, uninsured and facing a $30,000 bill, United Health executives were getting bonuses. When I was rationing my breathing medication, insurance company shareholders were getting dividends. So here's what I'm asking, if not demanding, on behalf of everyone who's been forced into the marketplace with no alternatives. Do not approve the increases that exceed federal growth standard unless these companies can prove down to the last cent that every dollar is for actual patient care. Impose complete transparency so the public can see exactly how much money goes to medical care versus executive compensation and shareholder profits. And remember that people forced into this marketplace don't have other options. When you approve these increases, you're not just affecting numbers on a spreadsheet, you're deciding whether people can afford to stay alive. Last thing is we are not walking ATMs. We are not profit centers. We are people who get sick and lost our insurance. And we deserve a system that treats our health as more important than corporate quarterly earnings. Please deny these excessive increases. Stand with the people who have no choice, not the companies who created that lack of choice. Thank you.
I am looking for this motion.
All right, with that, I want the record to reflect the public testimony of Consumer Advocate Sonia Seltmeyer is received into the record. In addition, I do have other electronic comments that have been received, and those will also be shown as in the record. And I think I know we did a lot of this electronically, but Ms. Seltmeyer is her recommended time period in which to allow others to continue to submit comments. I can take any comment prior to my decision. I do anticipate meeting with members of my staff as well as consulting actuaries to further discuss this, and as mentioned, may be in contact with some of the companies that give a recommended time frame for any other additional comments.
The sooner the better.
With that in mind, what I'll do is I'll leave the comment period open again since we're meeting in the evening until tomorrow at the end of the close of business tomorrow. So that would be August the 20th. Get any objection to that?
No, thank you, sir.
With that, the record will remain open for online filings. Again, I prefer that, again, given the lateness of the hour, I expect nothing will be received by mail tomorrow. So any individual that wishes to provide additional comment If it's submitted electronically through the means by which are made available on our website, that record will be held open until 5 p.m. tomorrow evening, which is August the 20th. Anything further, Ms. Meyer, with the record?
No. Thank you, Commissioner.
With that, I want to thank all of you for being in attendance tonight. Again, I know this is taking time out of your schedule. Very much appreciate you being here and offering your comments. I do want to share with you, I don't take any of this lightly. There have been, I've been serving as commissioner since 2017. Those were really difficult years. You've heard comments from Medica. There was a time when they were the only carrier providing coverage to us in the state. We're very pleased that other carriers are joined. Obviously, with competition, there you would expect to be some improvements. This is a really difficult time. I would agree for those comments, a difficult time for our country. I am not just seeing these rates in the individual market. The utilization is changing. Expenses are continuing to go up. Some of that is an expense that's realized just directly by the insurance company through. There's a lot of policy issues involved that frankly don't relate to insurance. But with that, again, I appreciate you coming and offering your comments. We are going to be off the record. Thank you.